You see, if you have a 401k, a retirement account, or 300 shares of any stock, you're sitting on a money printer. Right now it's doing nothing, collecting dust, have no use to you. But by the end of this video, I'm going to show you how to turn it into a weekly income source for you that pays you on repeat. This, ladies and gentlemen, is called covered calls. A very well-known secret that the big giants like Warren Buffett and Charlie Munger and hedge funds all over the world have been using to generate consistent cash flow without taking on any more risk, without selling your shares, just putting cash in your pocket. I'll show you how to do this. Let's strap in. How to actually get paid weekly from stocks you own. And I'm going to break this down step by step. Okay, the first thing you need to understand is the average American over a certain age has about $180,000 in value in their 401k or their IRA or whatever the case may be. Okay, and even savings, usually millennials have somewhere between $30,000 to $180,000 in cash saved up. Now, if you don't have that much, it's okay. Don't worry. To do this strategy, you only need 100 shares of that company. And you can actually do this with as little as $2,000. But to see a major impact in your cash, what you want to see is have a good balance, okay? And then you want to then rent it out for weekly cash flow. So if your 401k is 180,000, 45,000 in your stocks and 32,000 in your Roth IRA, this is usually a good place where you can see significant income. But my advice to people is start where you are, okay? Because any dollar found is free money. Because what will happen if I came to you and every week I handed you 20 bucks every week or 50 bucks every week just because? You ask me why? I say because I like you, right? That's how beginners start. Like literally with as little as $2,000, somebody can be handing you a check of 20 bucks every single week. But I'm going to use bigger numbers here so you can really see the impact of this. Matter of fact, one of my students, I taught them during my 5-day training and workshop. And from what he learned there, he started making $700 a week. So I'm going to show you exactly how we did that using this strategy. Let's say you have cash in your portfolio, okay? What you want to do is turn your stocks into a rental property. Would you have real estate but not have it rented out? No, you wouldn't. That doesn't make sense. Well, that's what your stock portfolio looks like. Your stock portfolio is literally real estate without a tenant in it. And what you have to do is put a tenant into that house, rent it out, and let your stock start paying you every single week. See, the difference between what I do and maybe real estate and other strategies is that I like to get weekly income and at worst case monthly. But the way I run it, I get paid week by week, every 7 days, running this covered call strategy. And most people do it differently, but this is what works for me and has made me and my clients the most profit. Because when you shorten the timeline that you're doing your covered calls and you're renting out, the more cash you get paid. Just like in real estate, when you have people that are paying you weekly, you get paid more than people that are paying you monthly or every 2 months. The issue with real estate is that a lot of those clients might be unreliable. But when we actually have the stocks, we're taking the risk away from it and we're renting out to great tenants by just using our assets. Before we get into that, let's actually get into how this works, okay? How covered calls actually works. Well, the thing about options is that options works in the rules of 100. In order to sell one options contract, you need 100 shares. So if you want to do this, my advice to you is you need to start buying stocks in hundreds. I don't care what stock it is, just start buying it in hundreds or build up to hundreds. And that can be the S&P 500. That can be a dividend paying stock. And I'll talk about the cheat code for that a little bit later. That can be one of your favorite stocks that you do. Let's say you drink Starbucks. Maybe you want to buy 100 shares of Starbucks. Whatever it is, you need 100 shares to make this work. 25 shares won't do it. 50 shares won't do it. At 100 shares, you can start generating somewhere between $50 to $200 a week. 200 shares, $100 to $400 a week. 500 shares, somewhere between $250 and $1,000 a week. just on your shares. So the shares still go up in value because it's an asset like real estate. But now you can rent it out like a rental property and get income from it. And it only takes me literally 5 minutes a week to do this, guys. So if you think there's some complicated strategy that's going to take you forever, this is absolutely not that. This is a step-by-step way for you to turn your assets, your stocks, into a cash flowing machine. Okay. So every 100 shares allows you to sell one contract. That is a non negotiable part about it. So unless you have 100 shares, I'm going to tell you that you can't do this. But the beauty is, stocks come in all shapes and sizes. So for example, BITX, okay? The stock price for BITX right now, I believe, is $16. So to buy 100 of those shares, you need $1,600 versus SPY, okay, which is the SP 500, or VOO is around $600 a share. A lot of people love VOO, right? So you need about $60,000 to have 100 shares on that. So there's a wide range. You can go on the low end to the high end. This strategy doesn't matter. What matters is that you have 100 of those shares. And once you have them, you can do the next best thing, okay? So step one, you own 100 of those shares. Let's say you own 100 shares of SPY at $520 a share. You sell one call option against that on Friday, and that generates you $120 in cash that week. But the beautiful part about it is immediately you execute that trade, that $120 enters your account literally within minutes. This is the beauty of the covered call strategy. Now, your head might be spinning like, how is this possible, or is this even legal? This is what the rich do to make crazy cash. They create win-win scenarios for themselves. And I'm going to tell you now, and I'm going to challenge you, because that's my job here as your coach, to challenge you, is that what you thought about money might not be true. And the sayings that they gave you, like there's no free lunch, and you can't have your cake and eat it too, are actually quotes for people who lose. Winners actually believe they can have everything, and they often do. You just have to have risks and controls in place so that you don't get crazy and become an egomaniac, okay? But the rich create win-win scenarios for themselves, and this is one of it. You buy stocks, you buy shares, 100 each, okay? You sell options on it, and then you generate cash flow, okay? So the best case, you sell options on that SPY contract, okay? The options contract expires worthless because you do it over 5 days, and then you keep the $120 premium, and on Monday, you do it all over again. Option number two, here's the risky part, okay? You sell covered calls on it, the stock goes up and it hits the $525 per share. You keep the premium, but you have to sell the stock and you make the profit. So it's a win-win scenario. And if you want to get back in SPY again, you just buy the shares all over again. So no harm, no foul. All that's happening is that you're agreeing to sell your shares. So no matter what happens, it's a win-win scenario. But I'm going to show you a safe way to generate cash flow without selling your shares, okay? And this is what's made me super successful, and because I know the parameters to put to make sure that that doesn't happen. Well, at least put the probability in your favor so it very rarely happens. But that's pretty much it, guys. That's a strategy. You have the 100 shares, you sell options against it, okay? And then when you sell options against it, you generate cash flow. That cash flow, you get paid every week, and then you rinse and repeat the strategy over and over and over and over again. So if you don't understand options at all, what I'll recommend you do is sign up for my free masterclass below, where I go through and break down a wealth building system for your money. But pretty much options is one thing you can use, not to day trade or gamble. This is not that. This is a systematic approach that the top 1% use to generate reliable income. Here's some tickers that you can look at for trying to do this. The first one I talked about, BITX, this is an ETF. Okay, and if you had 100 shares, you can generate somewhere between $80 to $100 a week. Okay, you can do it on SPY. SPY is really great for beginners, but you need a lot of cash to do it. And here's the great part about it, most retirements, most mutual funds are the SPY or the VOO. They're following the S&P 500. So you most likely already own the shares. You just don't know it. Okay. All you have to do is go into your account, log in, sell the covered call, and then generate the cash from it. Easy peasy. Okay. Meta is another example. Okay. That's Facebook for those who don't know. And you can make probably $100 to $400 a week on it. An SPG is a REIT, is a real estate company that buys a lot of real estate, and they pay dividends, and you can generate anywhere from $40 to $120 a week on these tickers. But here's the thing that's a super sweet scenario. When you buy shares of stocks that's already paying dividends, and then you sell covered calls on it, it's like you're getting paid twice. Number one, you get paid from the dividends itself. And number two, you get paid from the covered calls you're selling. Because remember, all we're doing is selling a contract. A covered call is a promise to sell your shares at a higher price if it reaches it within 5 or 7 days. That's really what it is. So let's say you have Apple at $100, okay? You have Apple at $100 a share. You can sell one contract at $130 and say, hey, if Apple reaches $130 in the next 5 days, I'm willing to sell you my shares at $130. But remember, you have it at $100. So you're making the profit anyways from the $100 to the $130. But the extra kicker is by making that promise, you get paid a premium. You get paid to do this. That premium that you're getting paid is the covered call. Okay. Once you do it on a week basis versus a month-to-month basis, like most people advise, you increase your cash flow. Okay. And you get money faster and also decrease your risk. Because according to statistics, you can look it up, about 80 to 90% of options contracts expire worthless. So the probability is actually in your favor when you do this, not the other way around. Okay. Here's the golden rule that I tell people. If you don't want to deal with selling your shares at a higher price, even though you can buy it again, you just want to keep collecting the premium, you want to do something called a 0.20 delta or less. A 0.20 delta is pretty much saying there's a 80% chance that you are not going to get exercised, that you are not going to have to sell the shares, and that you can just keep repeating the process over and over again. So at a 0.20 delta or less, the likelihood that your shares get exercised and you have to sell those shares is very, very, very low. But remember, even if you do, you're making the profit. Just buy them again, right? But this is one of the things that the smartest investors do because it's a win-win scenario. You have an 80% win rate of keeping the capital. Even in the other 20%, you're getting paid because you're making the difference in the share price. And then you also get paid to execute the trade. So delta is the probabilities your shares get called away when you're selling. Okay. So what you want to do is stay at 0.20 delta or below. 0.15 to 0.20 is the sweet spot week by week to maximize your premium and also keep your probabilities high of not getting exercised. So here's what you want to do. Here's your checklist, okay? Own 100 shares of any stock you choose, okay? And this is not financial advice. I just gave you 4 examples here that you can use. Okay, open your brokerage account, go to this week's options expirations, and find the call option between 15 and 20 delta, sell one contract, and collect the cash. So I want to show you a quick example of what this actually looks like in real time. What you want to do is go to any chart, any brokerage, or maybe even type options chain for let's even use a mid-tier stock like Amazon, okay? Options chain for Amazon, and we want to pull it up, and let's go to next week. So this doesn't show me the options chain. Perfect. Here's the options chain for Amazon. Let's go to next week, Friday, which I believe is the 17th, okay? If I wanted to sell a covered call, let's say I own 100 shares of Amazon and I want to generate income from it, I'm going to go out to the 0.20 delta or less. But let's say this is the 0.20 delta right here, right? It will literally pay me $153, okay? It says 1.53. I know that. But remember, to sell one contract, it's 100 shares. So you multiply this by 100. So for owning 100 shares of Amazon, you can get paid $153 a week by executing this strategy. That, ladies and gentlemen, is a game changer here. Okay? All because you understand the power of covered calls and how it works. So this week I want you to do one thing for me, okay? Check how many shares you have of any stock right now, whether it's in your brokerage, your old job, whatever it is, okay? If you don't have 100 shares, you can start buying up to 100 shares, okay? Number two, you can sell covered calls on that for next week's Friday. Make sure you do a 0.20 delta or below, okay? Number three, if you don't have the shares, start stacking. And number four, I do have a $27 product that teaches you how to generate income if you don't have the shares but you have cash. I have a $27 product that teaches you how to do that. Or you can start by just watching this YouTube video here. So if you don't have 100 shares and you want to rent your cash out to make money, this is where I would definitely start. And then as you're generating that cash, start buying the shares so that you can then do the covered call method. Okay, so hope that helps, guys. There's links below for my trainings. If you want this document, I can provide it for you absolutely free. Just comment the word document below. I will post the link in the description once we get 5 comments saying document. Chat soon.